Bitcoin drops to $79,300, and that wasn't the scenario expected at the beginning of this quarter. The truth is that most people assumed and predicted after those Trump-related upheavals after the inauguration that the market should strengthen. However, the truth turned out to be bitter and quite the opposite of what most people assumed, and what I would like to experience in this cryptocurrency market. So let's check today once and for all how it looks now, whether it could really be the end of the bull market, whether these declines might deepen further, and what specific moves I'm making. Because just this morning, I made some small adjustments in my portfolio, opened new leverage positions, removed some other leverages. And I will explain and tell you everything today, so I warmly invite you to watch. If you're still holding on here, haven't given up on the cryptocurrency market, or are even buying more, then leave a subscription and a thumbs up. I think that sooner or later, after every storm, after every rain, the sun comes out, and we will experience it too. There have been situations like this in the past, but sometimes you just need to arm yourself with patience, so I warmly invite you to the analysis. It must be noted and admitted outright that the liquidation of longs and the cascading declines were certainly influenced, to a lesser or greater extent, by what happened with one of the wallets belonging to Bybit. It was the largest theft in history, surpassing even the record held by Saddam Hussein, who stole $1 billion from the Central Bank of Iraq on the eve of the 2003 Iraq War, making it the largest theft in the history of the cryptocurrency market. And it is also compared to the largest in the traditional financial industry when it comes to banking. Following these events at the beginning of the week, there were mass liquidations of hundreds of thousands of traders, and according to data, about 400,000 positions were liquidated for a total amount of over $1.5 billion. And basically, to be honest, we're talking about an investor capitulation, right? Looking at the on-chain data, we see that holders first sent $7 billion in Bitcoin to CXs, to then sell them at a loss after we dropped below $90,000. And it was the biggest sell-off, at least this year. And beginners sold over 79,000 Bitcoins at a loss. This represents the largest capitulation since August 5th of last year, when you probably know what happened. There was a previous capitulation of a similar scale, and it occurred when Japan raised interest rates, which then triggered a massive deleveraging process in the global market. That systemic decline also marked a local bottom for that period. Although, we can't say with absolute certainty that further declines won't occur. The current price levels, in my opinion, already present interesting investment opportunities that rarely appear in the medium-term perspective, so if you have a strategy in this market, take that into consideration. Fear and greed, extreme fear, 21 points on this index, is a level not seen since the August crash, and it's also an argument that simply supports the idea that when most people are afraid and selling at a loss, it is potentially a good time for wise, long-term investors to accumulate, for example, Bitcoin or other favorite cryptocurrencies. That's why I'm showing and telling you the following. In front of you is a post I published this morning. So indeed, the current correction is approximately 27% on Bitcoin, talking about the level of $79,300. Ethereum hasn't dropped from its all-time high, but from the values in the second half of December, it has fallen by 48%, just as you can see on the chart in front of you. And going back to the topic, I understand that especially for newcomers to the market, this situation might cause some concern. The price performance of the second largest cryptocurrency in the world, Ethereum, is, to put it mildly, not very interesting. February alone has brought investors losses of 26%. Look, you have a table with these monthly returns in front of you. This is the worst February in the history of Ethereum. A weak Ethereum means a weak altcoin market as well, and the rest are cascading down somewhere. Looking at various crypto market trackers, it's hard to find altcoins that have been doing well in recent weeks. We have a red landscape with declines of -50, -70% from those peak values in December, sometimes from the all-time high, sometimes from the values reached a few weeks ago, about 2.5 months ago. So the current situation resembles a bear market more than a bull market. The question is where we currently are, where we find ourselves, and whether we should actually evacuate and move from altcoins to stablecoins, to Bitcoin, anticipating another crypto winter. Or perhaps we are at that point visible on the chart, which often turned out to be a turning point and something everyone is now waiting for. So for now, the negative sentiment is also affecting Wall Street. The entire ice on the cryptocurrency ETF market is dreadful. Practically every day we've had trading sessions in the red, and Tuesday's session saw the largest outflow from Bitcoin ETFs in history. Some analysts blame this situation on, among other things, investor uncertainty and concerns about rising inflation, macroeconomic uncertainty, difficult monetary conditions, and the specter of trade wars and high tariffs. And the head of CoinShares, in his latest report, specifically lists these factors as causing the outflow of capital from the cryptocurrency market. And of course, as is often the case in the market, there are investors who, in such moments, bet on the end of the bull market, further declines, make emotional decisions, often incorrect ones, and I showed you, for example, charts of the capitulation of new traders and mass liquidations. And then there are those who use the declines for accumulation, as shown by on-chain data. For example, on February 25th, look, as many as 25,000 Bitcoins were purchased by whale addresses, exactly when Bitcoin was marking its low for the day. Despite significant purchases by the big players during this period, it must be admitted that the local trend remains consistently downward. Moreover, Bitcoin lost important support at the $91,000 level, which is the blue band on the chart before your eyes, and this blue line represents the average purchase benefit for short-term investors. And the question is, why is this so significant? This level is important because it often determines whether investors have an unrealized profit or loss, and the shift from one state to the other can influence the further direction of price movement. And that's because much of it is based on investor psychology, especially those new to the market, meaning short-term holders who are susceptible to sudden price changes, simply because they resonate the most with what's happening in the market. A change in the state of their portfolio, from profit to loss, can trigger selling pressure as investors react emotionally to these visible drops in value, particularly when it comes to nominal prices. And that's exactly what's happening now, because currently short-term investors are at a loss. The selling pressure from their side is high. Another very important support level could be the $71,000 mark, which is the yellow band on the chart in front of you. I can already imagine the headlines when Bitcoin drops to 71,000, describing the ultimate end of the bull market. Indeed, that would be a minus 33%. A correction from the 109 level to 71 would be quite painful. But looking back, for instance, in 2017, we had as many as 7 such corrections on the way to reaching the peak. So while the black scenario of deeper declines is still very much in play, it wouldn't necessarily mean the end of the bull market. As you can see on the screen, these corrections were constant. They were significant for Bitcoin in the past, and it's not abnormal for such a situation to occur now. Altcoins naturally took a harder hit, so keep that in mind. Although unfortunately, according to cyclicality, according to what happened in the past with Ethereum, and according to what we mostly played for in terms of Ethereum and altcoins, unfortunately, such a situation should not be happening now. Based on what happened before and what often repeated in a similar analogous period, especially considering the prevailing external market conditions that influence and resonate with the cryptocurrency market, unfortunately, everything played out negatively here. As a result, we have an unrealized loss on individual altcoins, which I think we will compensate with longs that I am initiating for some appropriate portfolio values. On Bitcoin, the long position will be larger than on Ethereum. That's the first thing. Secondly, these long positions on altcoins are also not small. Finally, I think I will have a nice several percent of the portfolio in longs at 2 times, 3 times, 4 times on Bitcoin, Ethereum, and on the altcoins that I presented here, which I wanted to hold longer, and which should recover the losses on alts, which even hypothetically might not return to their original values. But I think they will, and thus sooner or later, it will be possible to come out of this unscathed, especially considering the values at which I bought the last 1/3 of the entire pool of altcoins today, which helped to slightly lower the entry price and the overall valuation. There is a person, Raoul Pal, and he also pointed out the 2017 Joseph and wrote on his profile that people need to learn to be patient because altcoins back then also experienced huge drops, around 65%. But in the broader perspective, these were local corrections, and the market grew until the end of the year. If someone no longer has the money to do DCA, you simply wait for the market to return to higher values. Then really, there are much better things to do while waiting for a pump than staring at the chart all day and pulling your hair out. Well, that's not how it should work, especially since in the coming months, we are expecting some positive changes in macroeconomics that could lead Bitcoin to new heights, even though it seems impossible now. The key word is liquidity. It's simply lacking in the market. Look at how it was in November and December. Here, I'm highlighting for you on the chart those several dozen days of growth, where Bitcoin gained a nice few dozen percent, where it grew on average more than 7% each day for many weeks. So such situations can definitely happen again. So also look at how strong the correlation Bitcoin has with the money supply expressed on this chart as M2. Because BTC mimics changes in liquidity almost 1-to-1, and when the money supply increases, Bitcoin rises, and vice versa. And according to this prediction presented on the chart, liquidity will decrease even more, and this is expected to last roughly until the end of February to the beginning of March, so prepare for a small continuation of declines. It's better to have this mindset, but later just know that there will be a light at the end of the tunnel because good news is also awaiting us. The fact that the market has become a bit deregulated doesn't mean it won't return to favor. It's also positive that the amount of free money in circulation is expected to increase again. And then you know what will happen to the price of Bitcoin. What should happen? It can be predicted. There is definitely a chance that Bitcoin will double by the end of the year, and that such a situation will occur. And for everyone worried about the current condition of the crypto market, I advise you to zoom out. Look at how this chart looks. Just remember, this is not a sprint. It's a marathon, a long-term game. It requires patience, a lot of humility, and an approach to the market without selfishly demanding to make a profit, expecting something to happen in a few days. No, invest, leave it alone, and do something else. Because just in the last 10 years, the amount of money in circulation has doubled, and every year more than 1 trillion new dollars are printed, and a portion of this money is absorbed by the cryptocurrency market and Bitcoin itself year after year. If you think that Bitcoin and crypto, with a market capitalization of 3 trillion, are at the peak of a bubble, then please compare them to other market caps known from stocks or gold. Because if Bitcoin reached the market capitalization of Microsoft, for example, which is $3 trillion, it would result in $150,000 per unit. If it reached the market capitalization of Apple, which is $4 trillion, it would result in $200,000 per Bitcoin. And if indeed, within a few years, it were to become digital gold and reach the market capitalization of that metal, which I actually doubt, but some people talk about it, its price would hover around $1 million, whether in a few years, a dozen, or several decades. Sooner or later, there is definitely a chance that Bitcoin will reach these values, especially considering that we have inflation, and generally, it appears that these values may be increasingly higher over time. So, well, of course, for such valuations to occur, huge amounts of capital are needed. But as I already mentioned, the amount of free, printed money is also increasing at a parabolic rate, and this influx of dollars has driven real estate prices to record highs. The stock market, just 3 zlotys, because the value of all assets in the world is estimated at about $900 trillion. If even a fraction of those trillions goes into Bitcoin instead of traditional assets, it could lead to further price increases in crypto in the long run. So do you really think that Bitcoin, with its market capitalization that peaked around $2 trillion, which is $2,000 billion, is at its historical peak at the height of its valuation? Well, I think not, right? Just consider that the stock market is historically expensive. For example, this is indicated by the ratio measuring the price of stocks to the average earnings over the last 10 years. And all of this takes inflation into account. And currently, we are approaching the highest values of the last 150 years, which were reached around the time of the dot-com bubble burst. The current stock market valuation is higher than before the financial crisis in 1929. And this suggests that the stock market is already very overheated. And that doesn't mean it can't become more overheated, but it just requires more liquidity. More money printing will flow into the stock market. But in the context of cryptocurrencies, the situation might be interesting because if investors start looking for alternatives to traditional assets, Bitcoin and other cryptos might attract capital. Historically, when traditional markets become too expensive, investors look for new places to allocate capital, and in times of rising inflation and economic uncertainty, cryptocurrencies could become the natural beneficiaries of this trend. Meanwhile, real estate prices are out of reach for most people, and rising interest rates are putting significant pressure on investors. However, later I will show you the overheating of Bitcoin on-chain data, and it will give you something to think about. At least I hope so, right? Because as I look at it, in recent days many people have already changed their bias, right? You stop believing in the continuation of the crypto bull market, and the question is whether, despite these declines, there's something behind this sudden change, and whether it's justified. After all, Bitcoin has currently dropped about 27% from its all-time high. And when we look at previous bull markets, especially the one in 2017, we had several corrections that were significantly larger, almost all exceeding the 30% threshold, and 99% of the current negative sentiment is caused by the fact that most people are fully or mostly invested in altcoins, and as we know, along with Ethereum, they are not performing well in this cycle. I also suffer from this, in terms of unrealized losses, often even on the dip, which I bought at 300 on Ethereum or on altcoins that I bought a few weeks ago, or 2 months ago, but I'm also glad that I have 1/3 in Bitcoin, that I had a lot of stable coins, and now I even have a little more than 1/3 in Bitcoin, considering what happened with Ethereum and altcoins. So this proportion changes every day, depending on how the situation looks. And if someone didn't realize profits in March, a year ago, or at least in November and December, they probably regret it today. They are waiting for the next wave of altcoin growth, the third, possibly the last in this cycle. However, looking at the incredibly strong dominance of Bitcoin and the lack of new liquidity in the market, it seems that it will be difficult for alt season to arrive right now, anytime soon. That's why many people doubt that the bull market will continue, because alts are mostly just bleeding into Bitcoin. On the other hand, Bitcoin itself hasn't been delivering great results lately, because even if we zoom out, the price has been moving sideways for over 3 months. And generally, the current bull market, which has been ongoing since the beginning of 2023, is characterized by being mostly boring, with only short periods of more aggressive growth, and we simply suffer most of the time. Most of the time it's declines, most of the time it's consolidation, most of the time it's boring. And there are individual weeks when it becomes pleasant and nice. Let's say there were 2 or 3 such months last year, and 9 to 10 months were a period of boredom, consolidation, and declines. And to earn the gains, you have to endure the worst moments. This is also a significant topic on X. For example, in 2023 and 2024, an analyst pointed out that we went through over 6 months of consolidation in Bitcoin, And during this time, altcoins didn't perform particularly well. When we compare these two sideways movements to two larger growth phases, we see that there's much less green on the chart. It's precisely when everything is rising that new people enter the market, not when we're moving sideways, and every young person wants to follow what's happening in crypto, right? Paradoxically, the irony is that during these green periods, the most people enter the market and have the greatest chance of losing because they enter during a growth phase, not like now, when according to history, you should be buying, where you should be taking advantage of corrections and investing the most funds at this moment to ultimately profit from it. A lot and minimize the risk of simply losing in the cryptocurrency market. So, paradoxically, that's how it looks. Unfortunately, most people will leave this market frustrated, offended, disgusted, because they will conclude that cryptocurrencies are crap. It was supposed to grow. It was supposed to be so beautiful because they entered at the peak, because they entered in March, because they entered in December. I can see it myself from the interest in the products I have or the number of subscriptions on YouTube or related topics, based on which I measure sentiment. So it really looks like this, that usually this sentiment also sooner or later corresponds to a severe correction coming and sweeping away all the people who wanted to make quick and easy money in the cryptocurrency market, instead of waiting a few months at least and investing correctly in a market that is simply based on compound interest, pure mathematics, on how these halvings work and how people's emotions simply correlate with the rise in cryptocurrency prices. So now we are again in this fascinating sideways movement on Bitcoin, often also in a downward trend, periodically. The sentiment is much worse than during the consolidation in 2023 and 2024, despite the fact that the price of Bitcoin is much higher than it was then. That's interesting too, but that's how it looks. People get used to the price because it's good. Many new people didn't buy earlier, so for them, it's nothing that Bitcoin is at 80,000. They will wait for 150, then they will be satisfied. And at this point, a 100-point question arises. How long can this sideways movement last? And is the bull market still ongoing? Are we in the middle of a bull cycle? Or will we be waiting 1, 2, or 3 years for the next cycle? If you think the bull market will still happen this year and that Bitcoin will surpass its all-time high, let us know with a thumbs up. And if you think not, leave a comment and write why you believe the bull market won't happen anymore. I'd be happy to read it. I will also share interesting and noteworthy information in the form of a post on Telegram. But going back to the question about Boxniak and the bull market, well, it's hard to say regarding the first part of that question because I've never played short-term exclusively, right? Of course, I have traded, I play sometimes, but I play out cycles in the long term. And I play because we are close to the bottom now, and this trend will soon reverse. I'm not fleeing in panic. Regarding the second question, a member of my team did a great on-chain analysis. We have something here called accumulation and threshold, right? And on the cyclical correlation, practically unchanged here for several weeks. Accumulation is still almost zero. We have a stagnation in the influx of new investors into the market, and until that changes, it's simply hard to see significant increases. We're waiting for purchases from big players, from whales and institutions, who will come in and scoop up this dip and initiate an upward trend, showing the rest of the world that someone is buying it. And further, the activity of individuals or relative activity, especially smaller ones, is marked by a blue line, has dropped significantly, while the activity of larger entities is still holding above the level seen during the long summer consolidation of last year. Regarding overheating and the risk of selling, we have VDDM and sell side. Overheating has been in a downward trend since mid-December. We have low values here, very low, characteristic of a consolidation period in the host. Sell side has also been in a downward trend since December. We have very low values on it. As for the whales, meaning the number of whales chart, there is also no change in the number of these whales, individuals or entities, wallets that hold at least 1,000 Bitcoins, which has been consolidating since April 2024. So, to summarize briefly, there are no signs of the end of the bull market. The indicators are not overheated, but on the other hand, there are also no signs of significant accumulation. That's why Bitcoin is stagnant, dropping a bit, and we have to wait for the situation to develop. Regardless of short-term movements, I am personally confident about Bitcoin's future. A strong Bitcoin should, of course, support the entire broader cryptocurrency market, including altcoins. Also, remember that there is a darker side to this market, because altcoins can be unpredictable. Altcoins can be periodically great, and you can earn much more on them than on Bitcoin if you hit the right moment and sell them well. But for most of the year, Bitcoin outperforms altcoins, and that's just how it is. So if someone doesn't have the time to actively play the market and follow it, they should just stick to Bitcoin. Most altcoins simply won't perform as well as we would expect. We have no control over that. There are a lot of altcoins. People are a bit disenchanted. The sentiment needs to change. And the era of pumping everything is probably over. We need to be more selective. For example, on CryptoQuant, which is a platform I use for analysis, they emphasize that projects with solid fundamentals and models that generate revenue, real funds, will grow, right? and these types of projects may outperform the rest of the market. Yesterday, I also talked with a guy named Max, who is from Germany, at this trading event, about how all these projects like some FN or others, those DeFi ones, are a joke, right? Often there are only 700, 1,000, 5,000 real users. What is that? It's nothing. So unfortunately, these shells are often more about marketing than having any real application that someone uses. So examples of safe outs that an investor should have when purchasing, for instance in the form of DCA, from cycle to cycle, or buying dips, flash crashes, even for years, are rather those for which ETF applications have been submitted. They shouldn't fall otherwise, and they are characterized by simply being able to survive. At least 7 cryptocurrencies are awaiting ETF approval by US regulators, which could increase institutional investments and demand for these assets. As of today, the cryptocurrencies awaiting ETF approval are Cardano, Solana, XRP, Litecoin, Hedera, Dogecoin, and Polkadot, the T7. These ETFs will eventually be approved, so if you're interested in altcoins, which of them seem like the optimal choice, aside from playing short-term and medium-term, I would venture to say that buying the dips on these outs, even when we're in a growth cycle, and not playing the market on such a scale that we sell everything this year, you can come out ahead with these. The truth is that Trump was supposed to bring significant growth to the crypto market and the stock market. Overall, such prosperity for the entire American economy. You know, there were announcements about regulations, tax cuts, and improvements in U.S. production, which were supposed to fuel market growth. But unfortunately, as we can see in the chart below, everything has been going downhill since the inauguration. However, not all market declines are bad, because for example, a decline in bond yields, a drop in the dollar, a decrease in oil prices, these are purely positive signals for classic financial markets. It's worth emphasizing that these were the assumptions of the Trump administration, as Scott Bessent, the Treasury Secretary, openly stated, highlighting that it would be a blessing for the economy if these things could be maintained while simultaneously implementing tax cuts, deregulation, and a moderate trade war. This would create a great macro environment for the development of American corporations. That's why I believe there's no need to fear a recession in the coming weeks or some massive bear market crash, because it's likely not going to happen yet. Not yet. There's also the International Monetary Fund, and they are predicting solid GDP growth worldwide. In the USA, they're talking about 2.7%, but in my opinion, these are conservative estimates, assuming trade war risks, which may not necessarily occur. It's also worth noting that for 2024, only a 1.2% growth was forecasted for the USA. It ended up at 2.8, so the growth was almost 2.5 times higher. This year might be similar. Analysts also tend to choose rather safe forecasts, so as not to stir things up too much. The fact that a recession is not threatening us in the USA right now is also evidenced by the bets on it. Currently, the chances according to this methodology are less than 25%, and it's worth noting that just a few months ago, the opinion of a 25% chance of recession was widespread. I even recorded a video with an analysis on this, and the chances exceeded 50% for such an outcome. So I'm not saying that the traditional market will soon skyrocket, that we'll see 10,000 points on the S&P 500 this year, but the panic related to a potential bear market is, in my opinion, unfounded. Because what is a 6 to 7% drop in the S&P 500 index, or 5% from all-time highs, compared to a consecutive increase of over 20% in VAT, right? There's no talk of panic, just at least for now, a correction. And we've already had 8 corrections of 5% or more in this cycle, which has lasted a little over 2 years, since October 2022, on the S&P 500 alone, right? And that gives almost 1 such correction per quarter. So I seriously think there's no need to worry about it for now, because if someone is just starting to invest in the classic market, even though there are slightly lower valuations of individual large, solid companies now, does the bull market in the USA have to end after 2 years? Well, no. Some cycles could last even 5 to 7 years. For example, look at this chart. It's no coincidence that bull markets can last several years, because 2 years of growth is nothing compared to some historical bull markets in the USA. High returns, for example, over the last 2 years, meaning those 2 times over 20% year after year, are also not a problem statistically for the following year. Because according to historical data, in such situations, 64% of the cases show that the following year on the stock markets was also positive. So the momentum mechanism also works. The fact that there have been increases doesn't mean there can't be more in the following year. In other words, assets that are rising tend to continue rising. And I know that sounds trivial. In the cryptocurrency market, it works, but in the short term. In the long term, not so much. But the traditional market is not as complicated as it might seem. Often, it's easier to predict than the cryptocurrency market itself. So, to summarize the current market situation, despite fears of a recession, macroeconomics in the USA does not indicate an impending downturn, and short-term panic is rather unfounded. Listen, I'm sticking to the plan, patiently waiting. I know that sooner or later we will come out of this unscathed. Those who have entered recently should simply approach the matter with humility, draw conclusions, and try to learn more. Take care, subscribe, and remember, If you think the bull market is over, let us know in the comments why. If you believe that Bitcoin will surpass its all-time high this year, give this video a thumbs up and share it with your friends. Take care, bye.